Good evening, everyone. Good evening. And as I start all of our calls with our daily affirmation, I am so thankful and grateful now that I have patience and discipline so that I am a master trader. And for those of you who don't know me, my name is Jacqueline Lopez, and I am one of the creators of the Milwaukee Sauce Strategy. And I am your honored educator for this evening. And so as I'm going to move on forward to get us started with this evening's class, I want to welcome you to the Harmonic Scanner 52 Weeks to Freedom call. This is class number 10. All right. And as we get started on all of our calls, I start them with our disclaimers. As you know, I am not a professional trader, so I'm not here to give you advice as to how to invest your monies into the Forex market. That is not what I'm here for. What I'm here for is simply to share with you some information, some insights, some techniques, strategies that I have learned, that we as leaders have learned, that we want to share with you so that you can add it to your repertoire of skills and techniques so that you too can become a master trader. All right. Now, I'm just curious. Is there anyone on the line that was on last week's call? All right, so we got no one that was on the call last week. All right, so then you guys are in for a treat. All right, so check this out. There's a few things that we're going to go over. I'm going to review last week's call because I called out a signal on EURNZD, and I want to show you guys the power of what we're doing here in the 52 weeks. All right. So let me just pull up this screen. Can everybody see the video on my screen?
Yes.
All right. Now y'all gonna have to talk to me now. For those of you that don't know me, never been on any of my classes, listen, this is never gonna be a lecture. It's gonna always be a conversation. So what you get out of this class is going to depend solely on how much you participate. So never feel like there's a dumb question, because there's no question that's a dumb question if you don't know the answer. I'm sure if you got the question, someone else has it as well. All right. I'm going to play you guys back a clip of last week's class because I want to show you something. And then we're going to focus in on it and analyze it together. If you have TradingView, then you can go over and look at the smaller time frames with the same Milwaukee Sauce setup to look for your entry on the smaller time frames, because your smaller time frames are going to set up first. But if you notice, look, this is definitely setting for a buy, correct?
Jackie?
Uh-huh.
On what time would we make or trade?
You want to look for your entry. If you're looking at the setup on the 1 hour like this one, then you're going to want to look for an entry on the 15-minute, going in the same direction that you're trying to go. So like, okay, so for example, EURNZD. Let me just take a look. All right, so let's look at EURNZD on the 15-minute. EURNZD, because I want to see, has it already started moving? All right, look, it's breaking the 50. Everybody see that? And it's pushing to the upside. Does everybody see that?
Yes, ma'am.
The blue is on top. It's out the street. Look, the blue is on top on the MACD.
Wow.
So we're waiting for this candle to close above this 50. If the next candle is green, pushing to the upside, it's a market execution. And you're going to ride it up to at least the 50 on the harmonic scanner, which is at 55 pips, before you're going to face any resistance. But if it breaks the 50, it's going to continue to push up to take profit one, which is at 150 pips. Does everybody see that?
Okay. I'm a little lost.
Okay. How are you lost?
Okay. How do you use the harmonic scanner to actually give you an entry point and an exit?
The Milwaukee sauce is doing it right now. So like right now,
Yes.
this signal is calling for a buy, right?
Okay.
I will market execution right now.
Okay. So
I would enter the trade right now. And I would say my take profit based on my trading plan, anywhere from 20, 25 pips, but you're going to be able to at least be able to probably catch it up to this 50 before you see any signs of resistance.
because of the okay.
Because the 50 is a moving average that we're using to help us show where there are strong signs of support and resistance. Does everybody see that?
Yes.
Yes, ma'am.
And if you notice, on the 15-minute, it's trying to break the 50.
Not really. I just went just now.
And what I would do is I start looking at even smaller time frames for that. Bitcoin's calling again. Look, the candle just called. Look, it just broke the 50. It's a green candle. It's out the street. The MACD is blue. This is all day a buy. Look, GBP USD is going off. I hope y'all just jumped in that EURNZD. GBP JPY.
I'm on it, coach.
USD CHF. All right, now everybody saw that, right? You saw that we called for a buy based on what the harmonic scanner had told us. Because if you go back and watch class 9, the harmonic scanner called on the 1 hour and the 4 hour that there was going to be a buy on EURNZD. And if you noticed in class 9, we looked at EURNZD on the 1 hour that's set up on the sauce. And then as we were going through the class, it further confirmation was given on the 15-minute, right? All right, now I want to show y'all something else. If you go to the harmonic scanner right now and you look at it right now on the 1 hour, can everyone see the harmonic scanner on my screen?
Yes.
All right. Does everyone notice that it did in fact do exactly what I said it was going to do based on the harmonic scanner and the Milwaukee sauce? It did in fact go up to the 50 before we faced any resistance. And once it broke the 50, if you notice, it went all the way to take profit one. Does everyone see that?
Yes, I see it.
All right. So now I'm going to go one step further than that. When we look at it, if you notice, everyone can see Trading View, correct?
Yes.
Yeah.
All right. If you notice where the black vertical line is at 7 o'clock or 8 o'clock on last week, Wednesday. Does everyone see that?
See that, yep.
All right. And this red horizontal line is basically the entry point that you could have had potentially if you jumped in that trade when I told you to during last week's class. All right. And if you notice, I'm going to zoom in so you guys can see this real close and real clear. We can get a real good picture of what happened. If you notice, we take our measuring tape from where we got in at. It pulled back about 25 pips, which is why we tell you to have a 30 pip stop loss, right? But look, it shot up 67 pips. Does everyone see that?
Yes, see that. Yep.
Yes, ma'am.
And if you notice, if you use your measuring tape and take it from where we jumped in at to the cross, that's 3940 pips. So either way, if you were basing this trade off of your trading plan, and what we're telling you to get is safely 15, 20 pips to cover your spread, then if you jumped in this trade and rolled this trade with us, then you could have potentially had what? 67 pips. You could have potentially had 37 to 40 pips. And if you were a more advanced trader, you could have continued to ride this wave. Let's zoom this thing out, because if you guys notice, this pair actually climbed a total of 223 pips. Does everyone see that?
Wow, yes. Wow.
Wow.
At its highest peak. But if you notice, you could have potentially had multiple entries every time it pulled back. Does everyone see that?
Yes, yep. Mm-hmm.
And if you notice, the 50 helps you with further confirmation. Because as it was underneath the candles, it continued to push them up. When it rolled with the candles, it consolidated. And if you notice, it kept going up, and then look what happens. They broke it. The 50 is now on top, and the candles continue to push down. Does everyone see that?
Yes, yes. Uh-huh.
All right, now, this is the question that I have for all of you. Does everyone notice that price when it closed today is very close to where we started off last week, Wednesday?
Yes, I see that. Yep.
Now that's interesting, isn't it? That raises a lot of questions, don't you think?
Mm-hmm. That's what's going to happen next.
Exactly. What's going to happen next? Now, here's the other thing that I noticed, which is very interesting to me, which is if you notice, when the market closed last week on Friday, it was in fact on a cross, was it not?
Yes, I see that. Yes. Yep. That red and blue. Yep.
So now, had everyone been paying attention to this particular pair, you would have noticed that when the market opened back up on Sunday, we were moving in a downtrend on the 1 hour. Does everyone see that? And you could have potentially caught from this cross when the market opened back up down here to when it consolidated again,
Yep.
which would have been another 52 pips.
Yep.
All right, now I got something even more mind-blowing than that. Check this out. Hold on, let me refresh it. If you notice, this is our weekly chart. Can everyone see the weekly chart?
I can see it.
Yes.
All right. So the
Yes,
vertical line, this vertical black line, if you remember, is on last week, right? You see it? July 1st. Does everyone see
Yes,
that?
we can see it.
Yes.
All right.
Yes.
Does everyone notice that this week's candle is a red candle? Does everyone see that?
Yeah.
Does everyone also notice that our EMA is underneath and the red is now on top?
Yes. Yes.
Do we notice that the RSI is now out of the street?
Street. Yep.
And do we notice that it potentially is looking like the MACD is getting ready to kiss and potentially cross?
Mm-hmm. Yes.
So then my question to you is, what could we potentially forecast is going to happen next week on the weekly chart?
Potential sell.
Exactly. Does
Mhm.
anyone on the call know how many pips EUR NZD gives out based on the ATR for the week?
Oh.
See, that means that somebody ain't been doing their homework. And if you're new and you're just starting the 52 weeks, now you're starting to see how we're starting to put all of these things that we've been learning over the last 2 months together for us to make an informed decision about how we trade, right? Now, if that's the case, if we notice that this week and last week's actual candle was a sale candle, right? Then wouldn't it be safe to say that when we got this potential pull to the upside last week was nothing more than a pullback on the higher time frames? Are you guys starting to see how we're starting to have these aha moments where we're starting to put everything that we've been learning through the academy, through the 52 weeks together to give us these aha moments?
Yep.
Yep.
Wow.
The reason that I had you guys get in on the 15-minute is because I know, and I want you guys to know and to learn and to realize that on the 15-minute, yes, you get an earlier entry, which is what I was trying to show you by getting in earlier on the 15-minute. But if you notice, it took a long time for the trade to actually set up and do the buy. So what I'm saying to you is you have to master your patience and your discipline when you're trading on smaller time frames, because you have to wait for all of the time frames to line up moving in the same direction for you to have these massive moves. That's the reason why I tell you to check the 15-minute, the 1 hour, the 4 hour, to make sure they're all going in the same direction. If you're looking for a sale, they all need to say sell. Otherwise, if one's out of order, then that's giving you a clear indication that something else is happening in the market that is potentially showing you either an early sign of a reversal or a potential pullback. Does everyone understand that?
Yes, starting to make sense. Yep.
Very clear.
All right, and as you guys start going through the other videos and as you rewatch them and ask questions in your study group, because that's where you're going to get your most support. Obviously, I can only help you so much because we only have an hour's worth of time together on these Wednesday calls. But if you have a question, or if you are seeing a setup that you think is something, but you're not sure, then just ask the team. That's what we're here for. As we all know, we're always a student. All of us, every last one of us is learning from each one of us to be better at what it is that we do, at this master craft that we have. All right. So I wanted to point that out about the power of not only the harmonic scanner, because think about it, guys. The scanner told us what was going to happen. We just utilized the Milwaukee sauce to give us a cleaner entry so that we could continue with confidence with our trades. Does everyone understand that?
Yes, ma'am.
Yes, making sense. Yep.
All right. And if you notice, you start to see where these signs of heavy consolidation happen are your levels of support and resistance, which is why we're using this 50 to help us see that until we can train our eye to do it on our own. All right. So now let's get back to our PowerPoint. So we reviewed last week's call, right? We checked out the harmonic scanner and showed how the harmonic scanner told us exactly what it is, what pair, which direction, how many pips. Basically, our entries, our take profits, and our stop losses. The only thing we used is the Milwaukee sauce and the strategy to help us with a cleaner entry so that we didn't get lost, right? We also looked at how many pips we could have potentially had if you caught that signal last week. So being on these calls, monitoring our study groups and the harmonic scanner group is very important so that you can catch these signals. The reason that we're giving you guys these signals is to help you with confirmed signals, not only to teach you how to become the signal, but also to help you with verified trades so that you can actually maximize your trading plan. All right. And I wanted to pull everything together and give you the aha moment as to how we're using our weekly chart analysis and the ATR. And we're looking at early entries on the lower time frames. And we're looking at the higher time frames to give us the longer moves with the potential longer or more pips that we can actually earn. All right. Now, I want you guys to start focusing in on and start really thinking about the lessons that we are actually learning through the market, right? You got to think deeper, go deeper, go deeper, go deeper. I know when I was in college, in school, I had a professor that used to always say that, go deeper, never stop at the surface, right? So when you're analyzing these charts and you're looking at the market, you're not only analyzing numbers, but you got to look at it as like you're analyzing your life. So you have to learn how to banish your emotions forever. Take control of them so that you don't make stupid mistakes, so that you can make sound decisions, so that you can become a confident and emotionless trader. If you take the emotions out of the equation, then you become more confident. You need to be able to base your decisions on simple logic and common sense, right? Most people hate math, right? I love math, and I'm gonna tell you why. The reason I love math is because it's cut and dry. The formula remains the same. It's the numbers, the variables that change. And once you master or figure out what the formula is, it doesn't matter how you apply it, it's gonna always be universal. So what we're doing is we're using the techniques and the strategies and all of the information that we're learning, not only through the IML Academy, through IML TV and all of the amazing educators, but also through the 52 weeks and all of this extra information that you guys are getting privy to. Because think about it, those individuals that didn't take advantage of this opportunity don't have access to this information. So you guys are always going to be one step ahead. And it's going to help you learn how to forecast the market's next move quickly, easily, and definitely with confidence. Because we already know with confidence comes success, right? And from success comes wealth. And one other thing that I like to always think about or resonates with me is something that Chad always says, is that success loves speed, right? And if you think about the opening motivational video that I shared with you this evening, you guys have to remember that tomorrow is never promised. So you have to dig deep, dig your heels in, buckle down, and study and ask questions so that we can get on with moving you guys in a direction so that you can accomplish the goals that you set up for yourself, set aside for not only yourself, but your family, your community, and how we can all come together to make these things work. All right? Now, understanding the market. Up until this point, we've been talking about price and time, price action and time, how price moves in any given time frame, right? But there's one other hidden thing that we haven't really talked about that we need you to be aware of so that you have a clear understanding of how the market works. So does anyone have any idea what that third magical thing is? Any wild guesses?
Patience.
Patience is good. Patience is good. Yeah, we definitely need patience, but nope, that's not what I'm looking for.
The
Structure.
news.
Say it again.
I mentioned news.
News.
Yeah.
Yep, we got to understand the news, but that's not it. I'm thinking of something that's universal. It doesn't matter what you trade. It's going to help you
Structure.
analyze the charts. I heard structure. What do you mean by structure? Elaborate. Go deeper.
I guess how the market looks, how it plays
What do
out.
you mean? What do you mean how it looks?
I guess geometry. I'm getting that. I don't know. It's a
No,
wild guess.
that's not what I'm leaning towards, but it's close. It's close.
Patterns.
Anybody else? All right. So check this out. This gonna blow your mind, right? It's the thing that we don't talk about as much, but that is there, underlining, that is pushing, moving, impacting the market. And it's something that we don't even really think about, but we do talk about, but not in the way that we probably should. So there's nothing new when it comes to trading, because the way that we trade and how we trade based on these three things is the same way that we've been trading, or that the four founding fathers learned or developed or discovered how the market actually works. And what I mean by that is that all of the financial markets that we have access to are manipulated in one way or another, right? And I know that if you've been trading and practicing long enough, you bear witness to how the market will move erratically or spontaneously, even if your analysis is correct, right? And the reason that is because there are only two leading indicators in trading. That's price and volume. So my question then becomes, who knows what I mean when I'm talking about volume? Anyone?
How much of that money is being bought
That's
or sold?
the activity that's
Okay.
going on right at that.
Okay, so look at it like this. In currency strength, what are we looking at?
Momentum.
Say it again.
Momentum.
Momentum. Okay, or strength of the currency, right?
Right.
When I refer to currency strength, I refer to it as a tug of war, right?
Right.
Who is the tug of war between?
The two pairs. Your base and the
Quote,
right.
right? Now think about it like this. We know if the base is strong, then we buy, right?
Correct.
Meaning, right? Meaning that there's more buyers in the market, correct?
Yeah, buyer and seller. It's more buyers.
And if we know that the currency strength is the other way, where the quote is the strongest, we know that we sell, which means there's more sellers in the market, correct?
Correct.
So when we're looking at volume, we're looking at the battle between the buyers and the sellers. Because without the buyers and the sellers, price doesn't move over time. Does everyone understand that?
Yeah.
Mm-hmm.
Yes.
So volume can't be hidden, and it's universal. So it applies to whether you're doing crypto, whether you're doing the minerals, whether you're doing indices, whether you're doing Forex, stocks, it don't matter. We know that we're gonna have to study price, time, and volume, correct?
Correct.
So we know that volume without the price is meaningless, because without price, you can't determine whether the market is going to go up or go down.
Right.
But it's the volume that actually reveals the truth behind the numbers, because it's the buyers and the sellers that actually move the market. So the only way to know whether a price move was real or fake whether we're receiving a fake out, is by using volume. So we use volume to validate and to forecast future price action. So if you think about it like this, guys, up until this point, everything that we've talked about through the 52 weeks that we've learned has been price and time. Has it not?
Yes, ma'am.
We haven't focused in so much on the support and resistance. We've touched on it, we've highlighted on it, but we haven't really dug deep into it, right? And as we start moving into the next upcoming weeks, right, we're going to start learning more about volume and how it impacts price, how it impacts it over time, and the different methods that are being used to influence it, impact it, and move it so that they can manipulate the market. And one of the founding fathers of trading, Mr. Charles Dow, the grandfather of technical analysis and founder of the Dow Jones, the Dow Theory, and the Wall Street Journal, one of his principal beliefs was that volume confirmed trends in price. So as these next weeks come up and we start to go deeper into volume and how to understand it and apply it to our trading strategies, and as we start to learn the new strategies coming up in the upcoming weeks, we'll start to have more aha moments as to how we all are going to become master traders as we apply the information. But let's be honest, let's be frank, guys. You're only going to accomplish your goals. You're only going to complete the mission of completing the 52 weeks if you follow the process, if you believe in yourself, if you believe in the information that's being shared with you, if you believe in the strategies. Like I said in one of our other classes, trading is 90% mental, spiritual, 10% skill set. We're giving you the skills. We're giving you the information. Like I told you, this information has been around since the beginning of the Wall Street Journal, since the beginning of Wall Street. So we're not teaching you anything new. We're just opening your eyes, shedding some light, giving you some insight into some information that you might not have been privy to had you not joined the 52 weeks. And how important and valuable it is to continue moving forward with what we're teaching you. And if you have questions or concerns and it's something that you're not getting that we're talking about, because I understand that the 52 weeks is moving at a rapid rate, then go back and review the academy. Make sure that you understand price action, time, the time frames that we're looking at. Make sure you're understanding volume. Make sure that you're understanding how all of these things come together. If it's the indicators, whatever it is that got you hung up, go back and make sure that you understand it and ask questions so that we can help you through it. All right, so now I want to know, based on everything that I've told you thus far, because I know I'm introducing a new concept with volume. And I know that there's going to be questions about volume, but hold back your questions on volume because I know that I'm going to dig deeper in next week's class. But is there anything that you guys have questions about regarding the signal that I called, how we analyze that pair and what it potentially could do for next week, or anything that we've talked about in a previous class?
Yeah, I had a quick question. So since we are doing the spreadsheet, the tracker, does that mean, will that kind of forecast what that pair did? Or did that just do like its own thing?
Nope. If you go back and you start watching the classes that refer to the ATR that start talking about it initially, I don't remember which class it is now, to be honest, sugar. But when you go back and you look at that class, it's gonna start to make more sense. The ATR is basically the average pip count for each pair for the week.
Okay, that
And
makes
so as you start to calculate the ATR, then you'll start to notice the patterns and the trends in which direction that particular pair potentially or typically could go and for how many pips. So for example, EUR-NZD, I think typically gives out about 250 pips every week. And we just saw that last week. Let's just go check it since you brought it up. Now you got me interested to find out. Let's see. Boo, boo, boo. Let's go check it out. EUR-NZD on the weekly chart. Let's just go take a look, just so we can confirm further analysis, all right? And then you'll understand what I mean. So with the ATR, right? This week that we in, the week that just closed, we see it, July 8th, 2019.
Mm-hmm.
All right. Now the ATR, when we calculated with the high, the price high of that candle and the low of that candle. And if you notice at the top right here, there's the H for high and the L for low. When you put your crosshairs on that candle, if you notice at the top, it gives you the high and the low for the candle.
Okay.
And you have to subtract that low from the high. So, for example, let's do this with my calculator. Somebody do me a favor. I'm going to have you guys write down this number, and then I'm going to have you read it back to me. The high for EUR-NZD for July 8th, 2019, the week of, is 1.70559, and the low is 1.68276. Does someone have that number?
Yes.
All right. Hold on now. I'm going to go to my calculator. Everyone can see my calculator?
I can see it.
All right, give me the high.
1.70559.
0559 minus.
The low is 1.68276.
276. 228.3 pips. Does everyone see that? So now we know that this week that just closed today, EUR-NZD gave out how many pips?
228.3.
There you go. So 228 pips to the downside. Does everyone see that?
Yeah.
And if you notice, the candle before it was to the downside. So the only thing that has me with some concern is that this 50 is right here where the candles have come together. Does everyone see that?
I can see it.
Yes.
So on the weekly chart, because that's what we're looking at right now, we need EUR-NZD to break and close the 50 so that we can continue to the downside. And when it does, we should see the MACD kiss and cross below the zero line. Does everyone see that?
Yes.
So that's on the weekly chart. And we know by calculating our ATR that EURNZD typically, I can't guarantee it, but typically based on the last 9 weeks now, it typically gives out about 250 pips every week in any one direction, because it's either going to go up or it's going to go down on the weekly chart. Everyone sees that, right?
All right.
Yes.
So when the market opens up, that next candle should be a red candle pushing to the downside.
The downside, yep.
And it will confirm the sell once all of your confirmations have lined up. The red is on top. It's broken below the 50. It remains under the street. And the MACD has now crossed where the red is on top. And it will continue a stronger sell once it breaks the zero line. Does everyone see that?
Yep.
Yes.
And on Wednesday's class, I'll try and remember to come back and take a look and see what EURNZD has done up until that point from Sunday to Wednesday. And then we'll be able to see how many pips it has given out over the course of those few days. So did that answer your question?
Sorry, Jacqueline, for the young lady that wanted to know how to calculate the ATR, it was lesson 5 on
There you
June
go.
6th.
There you go.
Okay, perfect. Thank you.
You're welcome.
Yep, and for all of my newbies, I know if you're just starting, class 1 and 2 will be shared this weekend. For those that are in their 3rd week, class 3 will be shared this weekend. And then obviously it takes me about a day to get this video uploaded. So this will be shared over the weekend so that you have it to review before next week's class.
Okay. Hello.
Yes, sir.
Hello, Jocelyn. My name is Almuta. I just wanted to ask about the previous classes, like you said, 1 and 2. Is there some place we can go to view those videos?
Well, what's happening is, depending on where you come into the group, I'm sharing them in the groups so that you don't get too overwhelmed with the information that's being shared. So basically, I'm sharing 1 video a week, depending on where you're coming in at.
Okay.
But what you can do is, if you're moving at a faster rate, or if it's something that you're missing, reach out to your study groups. That's going to be your biggest support system, because they're going to be able to have all of the information, because you have vets in there that's been there since day 1.
Okay, thank you.
You're welcome.
Yeah.
All right, so back to your next steps. Any other questions before I wrap this thing up?
Hi, I have a question.
Okay, go ahead.
Okay, so to calculate the ATR for next week, would I look at the last candle from this week?
I'll show you. So, for example, this week started July 8th. You see it? So
Yeah.
that's this week. Now, the last week started on Sunday, July 1st.
Yeah.
Or Monday, whatever. So the next candle will pop up come Sunday, which is what, the 14th, 15th?
Yeah.
So what you'll be looking for to forecast next week is all of your weekly candles for this week.
Okay.
So if you haven't done or been through class 5, then you need to see class 5 to really understand how to calculate the ATR and how to use it, because it's going to give you enough information, because I start you off with at least 4 weeks, which gives you an average to tell us typically how many pips in a week any particular pair will give out in any one direction. And we should be, as a team, calculating that ATR for every week since the 52 weeks started.
Okay. Thank you.
You're welcome. And what you can do, like I said, reach into your study groups and ask them, because they have the ATR spreadsheet. Some of them have it current all the way up to date. So just make sure. If not, you still want to go back and look at those other classes, because you want to learn how to calculate this stuff for yourself so that you become your own signal and you're not sitting around waiting for someone else. All right. So next steps, calculate the ATR for all of your currency pairs for the current week. Watch for the trends and the patterns. And newbies, don't feel lost. As you guys go through the videos, all of this stuff will start to make sense. I know you're coming in where we're starting to put some of this stuff together now, but it'll all seem to make sense, and you too will have the aha moment as you go back and review those videos, and it'll start to click in what we were talking about on these classes as you start to move forward. Also, start looking for the assigned pairs that you have in your study groups. Study the Milwaukee sauce. If you're not comfortable trading it live, practice it in demo until you do feel comfortable. Follow your trading plan. Start at the beginning. Start with $100, work your way up so that you can get to 500, get to 1,000. Then you're able to make a withdrawal and then have more in your trading account so that you have more leverage, so that you can actually move quicker and have you actually maximize your lot size based on how big your account size is. And we'll help you with that through the trading plan that we're providing you, so that we can move you forward into where you want to be and accomplish the goals that you set for yourself by the time you reach the end of the 52 weeks. So as you start looking for setups and you see them, share them in your study groups. It doesn't matter if it's right or wrong. The purpose here is for you to understand it, for you to learn it, and for you ultimately to be able to teach it, because the best way to know whether or not you've actually learned something, mastered something, is to actually teach and educate someone else. And then just stay plugged in. Stay plugged into your study groups. Stay plugged into the Harmonic Scanner Telegram group, because that's where you're going to get verified signals from, so that we can help you accomplish your trading plan. So if you're taking signals, make sure that you're taking signals from the Harmonic Scanner Telegram group, so that you know that those signals are verified with leadership, so that we can help you accomplish your trading plan. All right, guys, I really appreciate it. Thank you, guys. I apologize for not being able to teach Wednesday's class on Wednesday. I was having some personal issues. I had a little family emergency, but nonetheless, I had it taken care of. So I wanted to make sure that we got the class done. I got you the information and the value that I'm always honored to share with you each and every week, and make sure that we could record it so that those individuals that come in with us later on can follow us along our journey. So if you guys don't have anything else for me, then I'll see you guys on Wednesday, and have a profitable trading week next week.
Thank you.
Thank you.
Thank you.
Thank you. Thank you.
Thank you.